What is going on, everybody? Welcome to a live edition of the Afternoon Brew here on Coffee and Crypto. I got a phenomenal video for you guys today. We're going to be exploring Ethereum and giving a price prediction for what it could look like a year and some change from now after that ETH Merge comes out. It is going to be a phenomenal video. But first, I want to let you guys know it is brought to you today by Hedge. Go get Hedge right now. It's a phenomenal company helping you DCA and save yourself exchange fees and maybe even avoid exchanges altogether. It's up to you where you want the money sent, but Hedge allows you to take your hard-earned money from work and directly deposit it into whether it be an exchange or a cold wallet so that you can DCA without having to worry about all the exchange fees and going on and choosing a system. You can just go ahead and plug it and place it for weekly or bi-weekly DCAing opportunities. Go check out that link in the description down below. But now I want to bring on, from Crypto Stackers, Forrest, a phenomenal mind. I just got to meet him. He's been in the space since 2016, used to be the head researcher over at Token Metrics, a phenomenal resource to help people trade and analyze the markets. So you're definitely going to want to hear what he has to say. Forrest, what is going on? And let's go ahead and just jump on into this. Let's just go ahead and start talking about Ethereum and what you're thinking about what we're seeing here over the next couple of days.
Yeah, absolutely. Thanks for having me on, Tim. I really appreciate it. So Ethereum, I'll go ahead and say it just in case it's not in the thumbnail or in the title somewhere. I think that Ethereum could go to the $5,000 to $10,000 range within the next 6 to 18 months. We'll kind of call it up the middle and say a year from now. And I know a lot of people have a huge problem with that prediction. 5K, are you smoking crack? It's a bear market. We're sitting here at 14 or we're bouncing. We're like seeing this crazy volatility today between like 1,400 and 1,550 for ETH. But yes, I do think that a lot of people are underestimating the Ethereum merge and the effects that it's going to have on the price of Ethereum.
Yeah, and I want you to go and be showing some charts here in just a second, but let's just start with, you kind of referenced it right there. So nice and early, you guys got to hear $5,000 to $10,000, potentially anywhere from 6 months to 16 months. It's going to be big. I want to dive into your rationale as to why, Forrest, and we got to talk about this a little bit off camera, but I'm really excited for people to hear because this is an interesting take, one that I had not heard about before, but I also know that you have some backgrounds that a lot of people that I've talked to about Ethereum price maybe don't have. So let's dive into, let's ask you this. Let's start with the charts. I want you to show on the charts what you're seeing currently and what you're expecting to see, and then we'll dive into some of those fundamental reasons as to why Ethereum should be blowing up. And it, again, you don't want to go away because it is actually a very fascinating theory that I think just could be true.
Yeah, so obviously right now on the Ethereum chart, we are not seeing great signs. We're in a downtrend. Yes, we've come back up here to the 21-week simple moving average a couple of times, gotten some rejections. We're down here, down towards the bottom of our bands. It's a bear market. It is a bear market. But what you have to understand is the rationale behind this price prediction is not on the demand side. Obviously, right now, the demand for crypto and the demand and appetite for risk assets is down from a whole. Global macro looks like absolute trash right now. There is some light at the end of the tunnel over the next 6 months. If you look at presidential cycles, just from a market perspective, midterm election years are usually horrible years for the overall market. Up until September or October, post midterm election, there's actually never been a negative return. This is a fun fact. Never been a negative return from a midterm election to June 30th of the following year, that 6 to 7 month period in the S&P 500. On average, the market in that period of time rallies 16%. Now, I'm not saying that the S&P 500 and the overall market's going to rally in that time. I do think there could be some relief. And even if global macro stays bad, I do think that Ethereum can do well on its own. The rationale behind this is not on the demand side. Like I said, appetite for Ethereum, appetite for risk assets and crypto is low right now. But that doesn't matter because I believe that the price appreciation that Ethereum is going to see is going to be due to the supply side, right? So I recently put out a thread yesterday on this, just analyzing what happens when you reduce the supply of like anything. Like when you reduce the supply of anything, here's a chart that just shows basic supply and demand. If you take economics in college or even in high school, this is like one of the first charts they show you. If supply decreases, if supply shifts downwards, equilibrium price has to shift upwards along the demand curve. So if demand stays the same, or even if demand decreases a little bit, but supply is restricted, equilibrium price should increase. And that's what this entire analysis is based off of. I've gone through some examples and pulled some examples from the gold market where over a 10-year period from 1970 to 1980, we saw the production or the mining, right? The annual gold production measured in metric tons per year decreased by about 25% over a 10-year period of time in the 70s. And yes, there was some, economic unrest in the 70s. A lot of people getting out of the stock market and hedging with gold, worried about a recession, high inflation. But that was a very brief period of time where we actually saw relief in production of gold, relief in the incoming supply of mined gold. That same period of time was one of the biggest bull markets ever for gold. From 1970 to 1980, we saw a 2,300% price increase in gold. Now, gold is not a necessity. It is a speculative asset. It is a store of value, right? Before 1970, there wasn't a massive amount of demand for gold. It kind of had this, gold was always great, but 1970 is when it really, really kicked off in this huge bull market and established itself as quote unquote a store of value. Then there was a huge bear market for gold. And I know you guys are like, all right, well, why are you talking about gold when it comes to Ethereum? Well, this is the last example before we get into Ethereum's tokenomics in particular. But from 1999 to 2008 was the next time that we saw a pullback in gold production. Up until then, we were in a 20-year bear market caused by a rapid increase in gold production in that 20 years, right? We had a terrible bear market. Gold was a terrible asset to be in for those 20 years. The stock market outperformed it by a ton until 1999 when gold production slowed down again. Now, we see the same thing happen with gas and oil from time to time. We saw the same thing with chip shortages, but most importantly, the most corollary or close relation to what we're about to see happen with Ethereum has happened 3 times already with Bitcoin. You guys already know, if you've been in crypto for any period of time, you know that when Bitcoin's production or issuance or mining reward, whatever you want to call it, drops by 50% roughly every 4 years, it sparks a bull market. First time around, we saw 9,000+% gains. The next time it was 3,000+. This latest time, it was around 600, almost 700% gains from the date of the halving, from the time of the halving. At these halvings, the market knows about these ahead of time, but is incapable of pricing it into the price until that reduced production actually hits the market. And then the market has to react and adjust after that reduced production happens. September 15th, the Ethereum merge is happening. Mining rewards are going away. They're currently 13,000 Ethereum per day. They're going to be moving to staking rewards, a staking proof of stake model. And those staking rewards are going to be 1,600 ETH per day. That is a 90% reduction. That is equivalent to 3 Bitcoin halvings all on one day. So yes, demand is low. Right? Demand for crypto is not very high right now. But based on this 90% decrease in production rate for ETH on September 15th, I think that over the next 6 to 18 months, we could see price action similar to what we've seen with the Bitcoin halvings in the past. Yes, global macro is bad. However, this is a 50% reduction each time. We're talking about a 90% reduction for Ethereum. For reference, that 1970s gold bull market was a 25% reduction over the course of 9 to 10 years. 25% spread out over 9 to 10 years. This is 90% in one day, right? It was an 11% reduction in the follow-up gold bull market, right? Oil, which we didn't go over that example, but oil pumped 624% roughly from its low closes in 2020 based off of 15% reduction in global production. Now, oil is a little bit different, I understand, because oil is a necessity, whereas Ethereum is not necessarily a necessity. Gold is not necessarily a necessity. Yes, there are use cases, but obviously oil is going to be very, very sensitive to these shifts in supply. However, anytime we see a reduction in the supply of just about anything that has a decent amount of demand, the price, the equilibrium price on the demand curve where the demand and the supply intersect have to shift up because of that reduction in supply. And I don't think the market is pricing this in. And I actually think it's negatively pricing this in because of the risk of the merge. A lot of people don't want to be in ETH right now because what if something goes wrong with the merge? So I actually think that ETH is underpriced compared to where it would be if this was just a scheduled halving event or a scheduled production reduction like we see with Bitcoin. People don't sell their Bitcoin right before the halving because they're scared of something going wrong with the Bitcoin code. That's what we're seeing happen with Ethereum right now. If we get a successful merge, if there are no bugs, I do think that Ethereum could spark off a really big rally in layer one smart contract networks. So other stuff that could do well, Cardano, Solana, Avalanche, layer twos on top of Ethereum, Matic, right? Lido, Optimism. All these corollary things to Ethereum could potentially go into a bull market. I'm personally very, very heavily weighted towards Ethereum for the next 6 to 18 months based on this alone. So hopefully that kind of explains my rationale. 5 to 10K, it's within the realm of possibility if you compare it to a Bitcoin halving. I really truly do think that it is.
I think that's really interesting that you even you made some clarifications there. First of all, we talk about this on our channel all the time. When you make statements like this, people need to understand that there are if-then statements. And you clarified there at the end, as long as there's no bugs, as long as we have all these other things go according to plan, this should happen. And what I thought was even more interesting, and this was the part that I think that everyone, in case you didn't catch it this way and you didn't connect with that point, it's that he's talking about the supply side. Everybody always talks about price, and this is something he was talking to me about before we started this live. He was saying everybody always talks about demand, and demand is what makes the price go up, makes the price go down. But when we're talking about these Bitcoin halvings, but in this case it's not even going to be a halving, it's going to be a 90% reduction. When you have these things, it affects the supply, and we got to remember with economics, there's we're kind of sitting and comparing supply to demand, and when you get that massive drop in supply, of course that gives the demand more power, which should bring an increase in price. So I think this is a very interesting theory, but let's flip this just a little bit, because you said if then. So the if then statement was if we have no problems, then we should see this. Is there anything else down the road that you would also apply an if then statement to with Ethereum? So let's say we get this September 15th launch, the bugs aren't really there, but of course we still are in a bear market. We still have all the bearish pressure hitting Bitcoin and other altcoins from outside factors like the Fed and just geopolitical events happening, because so much is, there's so much we could kind of unpack there, but we're going to kind of keep in the realm of Ethereum. What is another if-then statement that would clarify, hey, if this happens, then this $5,000 to $10,000 prediction would be stifled and put off? Or even better, is there an if-then statement that says if this happens, this could happen a lot sooner?
Sure. Yeah. So obviously there are a million variables that go into the price of any asset, right? Like if Russia were to invade Taiwan tomorrow, that's going to affect markets in a huge way, especially in the short term. So obviously, if we see contention or war between China and Taiwan, or we see some other major event like that, what if we saw an earthquake in New York City, or what if we saw just something that just shook up the world, like we had a global pandemic that when we had lockdowns, and that really shook up the oil market and shook up a lot of markets. The Fed started printing money, and that fed into inflation, and that really pumped up the markets in the short term. And now we're feeling the negative effects of that, 2-3 years down the road. So there's a million variables that could throw this prediction off. And that's why I don't like making hard, steadfast predictions. And that's why I give such a wide range, like 5K to 10K. Maybe it's 12K, maybe it's 4 or even 3K. Maybe it's just a retest of some of these mid ranges or top ranges that we've seen in the past with Ethereum. However, I do think it's incredibly important to learn how to classify variables, right? I just talked about a million different variables that can all affect the price outcome of an asset. There are extrinsic variables and there are intrinsic variables. Intrinsic variables are always going to, I say always, generally going to affect the price of an asset much more so than extrinsic variables. So for example, one of the reasons we always see the Bitcoin halving have such a large effect on Bitcoin and on the price of Bitcoin and the price of the crypto markets is because the Bitcoin halving is an intrinsic variable that has to do exactly with Bitcoin. Now, if the S&P 500 falls, a couple points, does that have to do exactly with Bitcoin? Kind of. It's kind of somewhere between. It's very related, but it's not necessarily an intrinsic variable. And an extrinsic variable might be some sort of catastrophe or issue in Russia, Ukraine going to war. Obviously, that's going to be much more intrinsic or much more related to oil prices, wheat prices, right? Russia and Ukraine together are like 30% of the world's 30% of the world's wheat production. Obviously, it could affect crypto prices because we saw a lot of Russian and Ukrainian citizens turning to crypto in that brief period of time where the Russian ruble was like very, very volatile. But is that event necessarily intrinsic to Ethereum or Bitcoin in particular? It's not necessarily. It's more of an extrinsic variable that can affect the price a lot, but usually these intrinsic variables are going to have a larger effect on the price, if that makes sense.
Yeah, that makes a whole lot of sense. And I want to make sure everyone understands, because I'm going to ask him a question here in a second. For anyone who might be watching this thinking, oh my gosh, what is this guy talking about? Why are we even talking about 5 to 10K? We're still in a bear market. Forrest, do you think that when ETH2 comes out, because we're probably, what is this, like 2 weeks away? We're 2 weeks away from ETH2 Merge officially going, as long as everything goes according to plan. Are you expecting to see a parabolic run start on September 15th, or do you still think that there's a little bit of wrestling to do before that?
No, because what usually happens, especially with the Bitcoin halvings, is the market doesn't price it in right away. You see this slow creep up towards the Bitcoin halving. And then after the Bitcoin halving, you start to see buyers come in, right? You start to see the positive effects of the asset repricing as a result of that decreased supply. And what that results in is some really nice uptrends and some really nice charts. And it gives a lot of seeing price go up, even if it's just steadily, even if it's just in a nice tight range and sellers aren't coming in, or the miners who used to be selling twice the amount of Bitcoin and now are only selling 50% of the amount of Bitcoin that they mine, that results in some really nice price behavior, right? And it takes time. And then all of a sudden what happens is, yes, we're talking about the supply side, but then when price starts to reflect those supply side economics and starts to creep up, speculation occurs. That's where you get these big parabolic rallies that we see with Bitcoin, because all of a sudden people are like, oh, the halving just happened. Price is looking really good. We're climbing out of this bear market. We're about to break the old all-time high and move to new all-time highs. Oh, I better get in. And then demand increases, and that reduction in supply ends up causing speculative demand, and the two compound. And that's where you get these huge blow off tops, which inevitably come back down. That's why you constantly see Bitcoin and the crypto market give 60, 70, 80% corrections, because that demand starts to dry up. And then usually you find a new norm, a new range that is based off of that new supply, right? So the last market cycle back in 2017, we saw Bitcoin go from like $1,000 all the way to 19,000. Well, after we got out of that 19K bubble and the bubble burst, we found an equilibrium point. We shot all the way back down to $3,000, and we shot all the way back up to 12,000, and then we settled for the most part in the bear market, trading in a range between $6,000 and $12,000. $10,000 was pretty sticky for a while, and that was kind of the new norm. That was probably where Bitcoin had speculative demand not shot in and shot it to $20,000. Bitcoin probably should have stopped based off its supply halving, right? Its production or Bitcoin halving should have probably stopped and found equilibrium somewhere around $6,000 to $10,000. That seemed like a reasonable price range, right? But we see that the speculative demand overshoot it by like a factor of 2, and then things have to calm back down. That's what we're experiencing right now in this bear market. And then we have the added effect of global macro looking pretty poor right now, which is making me believe that we're probably kind of on the lower end of where the new equilibrium point for Bitcoin should be. I think anywhere between 20 to 40K is a really reasonable price for Bitcoin to trade at prior to the next Bitcoin halving. Yes, we may overshoot and go down to 10K, but 20 to 40K, 20 to 30K seems a very reasonable price or range for Bitcoin. And I think what could happen is that Ethereum overshoots. Maybe it overshoots to 10K, drops back down to like 3 to 4K. And that's the normal kind of range that we adjust to. Maybe the top side's 5K. We overshoot, we re-challenge our previous all-time high of 4,800, and then we fall back down to a range of $3,000, which is still a 2x from where we're at today. So I think some of the speculative demand can really amplify what the supply side is doing.
Man, that's some really good stuff. And unfortunately, that's all the time we have for today, because we do want to keep these shorter so that people can get in, listen to them, extract the information. Of course, just like us, Forrest is not a financial advisor. He's not here to tell you, man, go buy Ethereum right now because we're guaranteeing you it's getting up to 5,000. He just wants to continue to add value to you guys the same as we do, so that you can think for yourself, you can invest for yourself, and create that financial sovereignty that every single one of us wants. We have control over our money, not our money having control over us. If you guys want to hear more from Forrest and follow him, there's a link in the description down below. Go follow him on Twitter right now, and I'm going to have him on again real soon, because I want to hear more about what he's seeing in the space, not only from the fundamental update side, but also more TA. If you guys loved this video, go ahead and smash that like button. If you're not subscribed, thank you so much for watching. Subscribe to this channel for more content just like this. And with that being said, I will see you in the next video. Peace.
Oh, I got a real good feeling.